You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 19th day of April, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. One is private, the other public. Now, the private broadcast, that's from 9:20 a.m. Eastern to 11:30 a.m. Eastern, and that is reserved for members only and those who are taking our 1 week free trial. If you haven't taken the 1 week free trial, go to mytradingiq.com. At the very top of the page, there's a link that says 5-day free trial. No credit card required. Just click that link, fill out the registration form properly. It's an automated process, so if you don't fill it out properly, then we won't even see it, and you won't get your free trial. Okay? Now, today's Friday, which means today would be a very good day to sign up for the free trial, because here's what will happen. If you sign up for the trial today, we will get your desktop set up, get your indicators indicating. You'll have the entire weekend to get familiar with the indicators, and, some markets never sleep. So there are tradable markets over the weekend, but the weekend doesn't count against your free trial. So Monday morning, that's when your trial will officially begin, and you'll have all 5 days of next week. The day doesn't count against you. The weekend doesn't count against you. Pretty slick way to turn a 5-day free trial into a 7-day free trial, and it really is free. Well, it's free for you. It costs us time, energy, resources, attention, etc. But we want you to be able to take a look at what we have to offer with a clear head. Don't worry about money, okay? Just focus in on what we're doing and what you can learn how to do, so that at the end of the 5 days, you can make a well-informed and intelligent decision whether or not trading is right for you. Now, the afternoon broadcast, that would be this one right here, right now. There's a couple different ways to join this afternoon broadcast live. And like I said before, this is a public broadcast. It's open to everybody everywhere on planet Earth with an internet-connected device. The best way, and you only have to do this once, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. Going forward, what will happen every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion, and there's zero lag time. Now, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live but want to get caught up later. You can do both of those. I'm talking about our YouTube channel. It's very easy to remember. youtube.com/CFRN. You already know the YouTube part, so really all you have to remember is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. youtube.com/CFRN. All right, we'll open with our daily devotional and a word of prayer. Then we'll get into the markets. We'll talk maybe have time to talk about the big miss on Netflix. And then about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes. Then we'll wrap things up with our good word for the day. The topic of our devotion this week and a couple days into next week. What gives you hope? Our scripture today is Acts 2, verses 14 through 21. And I'm going to share with you from the Message translation. That's when Peter stood up and, backed by the other 11, spoke out with bold urgency. Fellow Jews, all of you who are visiting in Jerusalem, listen carefully and get this story straight. These people aren't drunk as some of you suspect. They haven't had time to get drunk. It's only 9 o'clock in the morning. This is what the prophet Joel announced would happen. In the last days, God says, I will pour out my spirit on every kind of people. Your sons will prophesy, also your daughters. Your young men will see visions. Your old men dream dreams. When the time comes, I'll pour out my spirit on those who serve me, men and women both, and they'll prophesy. I'll set wonders in the sky above and signs on the earth below. Blood and fire and billowing smoke, the sun turning black and the moon blood red. For the day of the Lord arrives, the day tremendous and marvelous, and whoever calls out for help to me, God will be saved. Again, that was Acts 2, verses 14 through 21 from the Message translation. Hope for rescue and the end of evil. To imagine a world without violent conflict or death, it's borderline impossible. Yet we all long for it. How can we hope for something that we can barely imagine? The answer might have something to do with the day of the Lord. In the Bible, the day of the Lord refers not to one day, but to many different events. Happy or sad, with one common characteristic: God rescuing people and eradicating evil from the world. If you enjoy doing evil and benefit from it, then the day of the Lord is sad for you. But if you hate evil and long for goodness, then the day of the Lord is awesome. Jesus shows up, and this represents a big day of the Lord. He starts destroying evil, but not with violence against human beings. He destroys evil by generously healing and forgiving people. His power is through love, not coercion or force. After his crucifixion and resurrection, possibly the most important day of the Lord so far, he speaks of yet another day of the Lord event on the way when he returns, when the world we've imagined and hoped for becomes real. May that good day arrive soon. Join me in a word of prayer. Heavenly Father, we thank you for the powerful outpouring of your Holy Spirit, as we just read in Acts 2. Lord, we thank you for the promise of your Spirit and the transformation it brings to our lives. Just as you poured out your Spirit on the disciples at Pentecost, we pray for a fresh outpouring of your Spirit in our midst today. Fill us, Lord, with your presence, your power, and your wisdom as we seek to fulfill your purposes in our lives and in our businesses. Grant us boldness, Lord, to proclaim your truth and your love to those around us. Help us to be effective witnesses for you, sharing the good news of salvation and the hope we have in Christ. Lord, we lift up to you all those who are in need of your saving grace. Open their hearts to receive your word and draw them to yourself by the power of your Spirit. We also pray for your guidance and direction in our businesses. Help us to be good stewards of the resources you have entrusted to us, and to conduct ourselves with integrity, honesty, and compassion in all of our dealings. Thank you, Lord, for the indwelling presence of your Spirit and the transformation it brings to our lives. May we walk in step with your Spirit, bringing glory to your name in everything we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. Now, let me give you the numbers from around the world. I'll start here in the U.S. with the cash markets, or the indices as they're called. It's a mixed bag. The Dow's up 91 points. The NASDAQ is down 256. That's well over 1.5%. S&P 500 is down 38. The Russell 2000 up 6. Now, as futures traders, we like to see the four major indices the same color. We don't care if they're all four green or all four red, because as a futures trader, we can be long, short, and long again all in the same hour if that's what the chart in front of us tells us to do. But it becomes like a tug of war when we're divided, even when just one of the markets is in the red. Again, we've got the Dow and the Russell in the green. Granted, not by a lot, but in the green. The NQ is seriously in the red, and the S&P is down about 0.75%, 37 points. In the commodity basket, crude oil is up 39 cents, trading 83.12 last. Gold is up $9.20, trading 24.0720 last. Silver up 30 cents, trading 28.68 last. That's a gain of over 1%. In the Asian markets at the close, the Nikkei fell over 1,000 points, 1,011. That's a drop of over 2.5%. The Shanghai dropped to 8. The Hang Seng fell 161, which is basically 1%. And in the European markets at the close, FTSE up 18, the DAX down 100, the CAC down 85. No, not true. The CAC is basically unchanged on the session. It's down less than 1 point. So that gave us a red day in Asia. It was a mixed day for the UK. And as mentioned, it's a mixed Radio Friday here in the US of A. So with that, let's go to Logic 247. That's our 24/7 around the clock E-mini alert service. We're currently in week 298 of Logic 247. Over the last 298 weeks, we have issued over 16,500 individual handcrafted alerts. This recap was done this morning at 8:45 a.m. Eastern. So some things have changed since then. There have been some additional alerts put out. And so this afternoon, this evening, Valerie will do a final recap for the week. This is where we stood this morning at 8:45 a.m. Eastern. Going back to when the week started, Sunday night at 6 p.m. Eastern, we issued 34 alerts. One never triggered. We were still waiting on 4. That gave us 29 actionable alerts, of which so far nothing has stopped out, but it's only Friday, right? Now, that's unusual, honestly. What we've averaged over the last 298 weeks is 20% or less of the alerts being stopped out based on market structure, and a very simple process we teach all of our passport holders. So, at 8:45 a.m. this morning, awesome week. We'll see what changes between now and the end of the session. Now, I haven't done this week, so I'll do it right now. Just give me 1 second. Some scrolling. There we go. All right. Okay, last week, which was week 297, we issued a total of 60 alerts, 14 never triggered. That gave us 46 actionable alerts, of which 8 or 17% been stopped out based on market structure. And that simple process we teach all of our passport holders. Now, we're into the new week. This is going back to Sunday night. Good evening and welcome to Globex. If you come from the world of equities, then you're accustomed to the beginning of the week being Monday morning at 9:30 a.m. Eastern. But as a futures trader, we go to work Sunday night at 6 p.m. Eastern. For us, that's the beginning of the Monday session. That's when the Globex markets open. And quite often our members are able to get their goal for the day Monday, Sunday night. So, this is what every alert looks like. There's a specific entry price, like here. So 51.69, initial target 51.67, and then I look left because it's a short to look for potential swing lows on the 30-minute chart where all the alerts are created. And then the final trade to target will be the weekly trading zone below. Here's a short on the Dow, short on the Russell, short on the NQ, short on crude, short on gold, another short on gold. Well, this was a long on gold. This was a short. B is buy, S is sell. Long on silver. Now you've got the initial target. That's designed to get you your goal for the day. But again, I look left. Now this is a long, so I'm going to look left for previous swing highs, which can become obstacles to the trade. So for this alert, we had one target, two targets, three targets, four targets, and then a final trade to target. If it is a long trade, the final trade to target will be the weekly trading zone above. If it's a short alert, the final trade to target will be the weekly trading zone below. Here's one never triggered or still waiting. Long on crude, long on gold. No trigger here on silver. We had a long on the ES by 51.10. Here's your goal for the day at 51.12. If you want to stay with the trade, then you've got an obstacle at 51.15, and then another one at 51.23, and then the final trade to target at 51.32. Long on the Dow with the initial target, goal for the day, and then 1, 2, 3 additional targets, and then a final trade to target. Short on the Dow, long on the Russell. Yes, no trigger there. Short on crude, long on gold, short on gold, long on silver, still waiting, short on crude, short on the NQ, short on the Russell, short on the ES, short on the NQ, short on crude, short on gold, short on the ES, short on the Dow, short on the Russell, and short on the NQ. And then we roll into today. These were all published after Valerie had done the recap. And so she will get these recapped this afternoon or this evening. I like to go through those at least once a week so you understand why there's multiple targets. And the goal of the alerts is to teach you how to look left and spot those potential obstacles. Our goal for you is that you become self-sufficient. If you want to become someone who trades for a living, that's never going to happen as long as you're dependent upon someone else to tell you when to get in and when to get out. You've got to learn to read the chart yourself, understand what it's telling you, and then instinctively know what the next high probability move is. Now, when you've done your best work, your best analysis, you've followed all the rules, you've done everything you're supposed to do, remember what I said. Over the last 16,500 plus individual alerts, averaged on a weekly basis, 20% or less being stopped out based on market structure and that very simple process that we teach all of our passport holders. Hang on one second. Okay. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different. Logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs don't come out around the clock. They're posted shortly after the Globex open each evening. Globex opens Sunday night at 6 p.m. Eastern, and then it closes Monday afternoon at 5 p.m. Eastern. And then Monday night at 6 p.m. Eastern, it reopens, and that's the beginning of the Tuesday session. So Sunday night through Thursday night. So Thursday night is the beginning of the Friday session. This report is published shortly after the Globex open. We cover all the same markets that we do with the Logic alerts. But this is your next step in becoming self-sufficient. Because with the Logic alerts, I look left for you so that you learn how to spot the potential obstacles to the trade, whether it's a long trade or a short trade. With the CTAs, now you're stepping your game up. You're learning to look left yourself and find the proper entry spot. First thing you do when this report comes out is go to the 30-minute chart of whatever markets you actually trade. Make note of where price is at the time the report comes out. Whether you're right there when it comes out or maybe you show up 2 hours later. On your 30-minute chart, make a note where price was at this time. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is simply the green line you'll see on my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you're looking at. You'll see it on my daily chart, you'll see it on my 30-minute chart, you'll see it on Michael's tick charts and range charts, 5-minute charts. Doesn't matter. Doesn't matter what time. See, price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And I'm not just talking about futures, I'm talking about stocks, crypto, Forex, ETFs, all of it. So, with the CTAs, you're stepping up your game, you're looking left to spot potential obstacles. and you're learning how price behaves at a weekly trading zone. That is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. It's that simple. Now, we've published the zone since December 14th of 2009, almost 15 years. Every week for our members, they come out Monday morning at 6:15 a.m. Eastern, so our members have a chance to get them on their charts before Wall Street even wakes up for the week. Now, on Monday, the previous week zones still hold a little sway over the market. So it's a good idea to hang on to both sets of zones through Monday, and then by Tuesday, the new zones have typically taken sway over the markets. Beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's go take a look at the daily chart. Why the daily? Glad you asked. Institutional traders are the ones who actually move price. Look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and the size that the institutional traders trade in. The size they trade in is what actually moves price. So no matter what you trade, maybe it's a different futures market, maybe it's some individual stocks, crypto, Forex, ETF. If you'll learn to spend 2 minutes with the daily chart before you begin your trading session, you'll have a pretty good idea which way the wind is blowing. Because you're literally looking over the shoulder of those traders who actually move price with the size of their trades. Now, the new all-time historic high was put in on April 1st, April Fool's Day. The irony of that is not lost on me. Now, the fib retracements you see are drawn from the October 27th low to the April 1st high. As you can see, price does not trade in a straight line. It goes leg, retracement, leg, retracement, leg, retracement. And you'll notice that price always reverts to the mean. In our case, the mean is green. It's called the BBC, just stands for bull, bear, cross. When price crosses below it, we're bearish and anticipate lower prices, like here and like here. But when price crosses above the green line, then we're bullish and we anticipate higher prices like this. Now you can see all the times that price has pulled back to the BBC since November 2nd. But every one of them held until April 4th. Now, I kept talking about how long in the tooth this move was, and we were due for a retracement, and, well, by golly, here it is. Now, we're well off the low of the session. The next major support is an area right here. You've got the 38% fib retracement at 49.06. You got the 24% fib extension at 49.16. So that's a nice area. Okay. Now that 38% fib retracement should give us a nice bounce. On the 24, we expected a nice bounce. 24 fib retracements right here. Okay. And it gave us a wee bit of a bounce. 50.69, we'll call it 50.70. we bounced up to 50.95. So we got like a 25-point bounce, which on a daily chart, that's not a lot. But here's what's interesting is we came rushing down through the 38% fib extension. See, these short lines are the extensions, the long lines are the retracements. Question is, where are we going to close today? Now, we're slowly working our way back below that 38% fib extension. Now, we've already taken out that low. So the next low would be roughly 49.29, and then 49.16, and then 49.06. Now, 38% retracement should give us a pretty nice bounce. But it doesn't matter where you look in the world, there's trouble. We're in a presidential election year, which is typically bullish for the markets. There's so much stuff going on. From Capitol Hill to border to Ukraine to all the saber rattling in Iran. I mean, wow. We go to bed every night wondering what kind of world we'll wake up to tomorrow. We just have to put our faith in God. Trust Him. Get your affairs in order today. I'm not talking about your bank account. I'm talking about your spiritual life. Get that in order today, because none of us knows what tomorrow's going to bring. So I'll be interested to see how we close today. We're below the step line. We're below red and falling. Taking out the 38% fib extension. But we never made it down to this low right here. So we'll see what happens between now and the close. Okay, all alerts are created on the 30-minute chart. Now, this vertical line separates today, Friday, from Thursday, from Wednesday. When price rallies up to a weekly zone, we expect resistance. When price drops to a weekly trading zone, we expect support, until proven otherwise. We came down to the lowest weekly zone for this week. Now, this was the opening candle last night. It's 15 minutes into the life of this candle. These targets were published. So you had plenty of chance to get your goal for the day right there, early on, by 7:30 p.m. Eastern. And then price continued on down through the short target, all the way to the zone. It's a big move. It's almost 60 points. But the zone that was published Monday morning at 6:15 a.m. Eastern did its job, became good support, sent price back up to the BBC, and while the pullback holds more often than not, we know that eventually it's going to trade through. You never know when it's going to trade through. You got to be patient and wait for the candle to complete. But we closed above it, caught a leg, retracement, a leg, and a retracement, and a leg, and a retracement, and now we fall short of taking out this swing high. Okay? Took out this one, but we failed to take out that one. That's a sign of weakness. Price goes back to the BBC, pullback holds, and it holds, and it holds for an hour and a half. But while it's consolidating, blue and climbing turns to red and falling. And you can see it looks like we're headed back to that zone below. Now, managed to put in a low at 5,275. So this support from earlier in the session kicked in here. So as price rises, where are the obstacles? Step line, BBC, red and falling. Okay, this was a brisk move. Price traveled quite a distance over just 1 hour, 2 30-minute candles. Okay. Only natural when you get a move like that you're going to get a bounce, a retracement. What you should be looking for is the spot where it gets hung up. Maybe it's here, maybe it's here, and then it rolls over and comes back down to test this low. On the Dow, here's where we opened last night. We dropped pretty quick to the short target. We traveled down to the zone. We spiked the zone. If you look left, you'll find out where that support came from. And we go back up to the zone, consolidate. Only 3 things happen at a zone. 70% of the time, it's going to be this, consolidation. Even if it's only 2 candles, that's consolidation, consolidation. 20% of the time, rejection. See, this was a red candle all the way down to the zone. By the time the 30-minute candle closed, price had been clearly rejected. And off we went, back to the upside. And then 10% of the time, you get what's called the slice. That's when price slices through a zone like it's not even there on the 30-minute chart. When it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. That's what happened. On the Russell, here's where we opened last night, and we dropped to the short target, dropped all the way to the lowest weekly trading zone, the one published Monday morning at 6:15 a.m. Eastern. Buyers bid us back up, got us above the BBC, pullback held, got another leg, and a retracement, and another leg, and a retracement. And so far that pullback is holding. Even though we spiked it, it's holding because both candles are touching the BBC, but we got red and falling overhead. And you see all these wicks to the upside where price kept getting rejected? At some point, buyers are going to say, you know what? I need to hit the pause. I'm talking institutional buyers. They're going to hit the pause button. It takes financial commitment for price to rise. It does not take any financial commitment at all for price to fall. Buyers simply stop buying until they can get a better price. It's really that simple. On the NQ, here's where we opened last night. Came right down to the short target. Traded below the lowest weekly trading zone. Then we got back up to the zone where we consolidated for hours. We made a little run to the upside, but we were unable to take out that high right there. Sign of weakness. Now we're back below the lowest weekly zone. Now, over 15 years, there have been a handful of weeks, maybe 2 handfuls, where in one of the markets, price closed above the highest weekly zone or below the lowest weekly zone. And that's how markets work, okay? Now, what do you do when price gets below the lowest weekly zone? You can go look at previous weekly zones because you should be keeping a journal of those to see, and your best bet is to just look left, okay? Right here. Before we got to this low, buyers stepped in. We already got the bearish cross, so we'll look for price to attempt to move higher, but we may have lower prices in store here. All right, Michael's here. He's going to give us a recap of the live training room. Then we'll go live on TradingView for 30 minutes. And then I'll finish up that recap and close out the week with our good word for the day.
Yes.
Looks good.
All right. Good. All right. Let me click on that. All right. So here we go. Good afternoon, everyone. Today is Friday, the 19th day of April, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this purple button right here. There's no credit card required for the trial. Just click that purple button, sign up, and you're going to be sent to, I got to refresh this, you're going to be sent to this registration page right here, right? It's got the fresh stuff for next week. Oh, well, it's got this still showing. Oh, wait, that's I'm clicking on the wrong one. It's this one. I got to refresh. It's got the fresh stuff for next week. Okay, now that did not refresh. Anyway, when you go here, refresh this. This is what I need to. Okay, and now click on that. I know I just did this. There it is. Okay. And get to this page. And on this page here, all that we ask for is your name, your email, and your phone number down here. Okay. Fill out all this stuff so we can have an idea where you stand as a trader. If you have TradingView, give us TradingView login ID here. If you have an NinjaTrader, give us your machine ID, and we'll enable your indicator set for you. Ismail, your indicator set is enabled. Right, I saw your thing just come through. Your indicator set is enabled. And yeah, and so that's what you need. All right. Once you get your indicator set enabled, then come out here to trading platforms. Okay. On trading platforms, if you have TradingView, you can click on this. All right. But I'll go through it all really quick for you. You can go straight to trade rules if you want, depending what level you have. Ismail, I don't remember what level you had, if you were essential or the free version or premium or whatever version you had. But if you type in, I'll be able to tell you better what to do. But if you have essential, click on this, it'll give you 2 charts. If you have premium, click on this, it'll give you 4 charts. Okay, and it'll be all set up just like mine. If you happen to, if you have whatever you have, just open up your screen, right? If you have no charts at all, if you have no indicators at all, just open up your screen so you have some chart. Usually Apple is the default one for people who have nothing else. Apple is the default, and it'll come up with Apple, and then you only have to go to indicators. Go to indicators. You can have an invite only. Click on context PP one time and ultimate slingshot one time, and that will set you up. All right, that'll get the indicators on the chart for you indicate. Now the charts that we use in here, we use range charts. All right, this is a 1 minute chart, but the charts we use in here are range charts. Okay, these charts, I don't need to do that. That's TradingView paper trading, but these here are range charts. All right, this is a 7 range, 7 range, 7 range, and this over here is a 15 range. All right, so did I skip over everything about how we did today? I think I did. So I showed you how to take the free trial, and then I went into a lot of detail about that. But let's see how we did today. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. The spreadsheet shows how we did this morning in the morning session and how we've done over the past 10 plus years every morning. Today, the 19th day of April, 2024, we made 106 on the NQ. Now, this 87 ticks right here is a combination of the YM and the Russell. The YM, we were at 77 ticks, and the Russell, we're at 10 ticks. It's a combination of the two of those. See up here, it says YM, RTY. They're both $5 a tick. That's why they're in there. Combined like that. And I gave NQ its own column because it has so much all the time. But you can see this one's doing pretty well this month. 1940. That's because I added the YM, I think. Last month it was at 1285, but last month it was, I didn't have the YM in there last month. It was just a Russell. Okay. So we're doing pretty well adding the YM in this month. I think the YM has been a good addition. Anyway, we didn't do anything with crude or gold, and we ended up with +1 tick on the ES. So that's 977.50 with 1 contract this morning. Today it took 4 minutes and 3 trades to get to the goal for the day. Now with 16 contracts. Again, it was $210 is what we're at. So it was $3,360 with 10 contracts. I mean, 16 contracts. With one contract, it was 210. With 16 contracts, 3,360. We took a whole bunch of trades this morning, 38 trades in total. Fridays, we usually take more trades because I don't have a lesson plan on Fridays. So on the month now, we're at $7,522 per contract over 15 trading days, averaging $501 with one contract each trading day. On the year, we're at $30,512 over 75 trading days, averaging $406 with one contract for the morning session. Okay, now in here, this is important stuff. If you were to follow our 24/20 blueprint and start the year with one contract and add one contract per month, so far this year, if you did that, you'd be averaging $861 per hour, right? You would have only needed 29.11 hours to get your goal for the day every day for these 75 days that we've traded so far this year. You needed 29.11 hours to get your goal. So if you divide that, what does that say? We can do it by the number of minutes, I guess, right? 1,747 total minutes. Is that right? 1,747 total minutes. It took us getting our goal. So if where's my calculator? It's way over there. Okay. 1,747 divided by 75. So we're averaging 23 minutes a day to get the goal. Pretty good stuff, I think. If you can get the goal for the day in under half an hour every day, that's great. Anyway, that's where we stand so far on the year. And this column right here, the $5,257 an hour, that is if you started the 24/20 blue last year in January when I did. That's why I'm on 16 contracts now, because we're in the 16th month of the 24/20 blueprint. What that means is over 24 months, we want to get up to 20 contracts, but I'm not going to need 24 months. I'm just going to need 20. So it'll be a 20/20 blueprint for me. By the time I'm done, it should be August in here when we're done. And at that point, we should be, this total number right here should be way up there. This number here will also be way up there, but that's what we're looking at in there. Hang on. Okay, just checking something there. Okay. So let's get into the actual trades. All right, get into the actual trades right now. We just had one right here. I'm actually going to take that right there on the YN. We had a blue arrow right here that hasn't gone 4 ticks into profit yet, so it's still a valid trade. The trades that I did take this morning, though, let's start out with that. All right, on the YM, we're going to do Alt and back and see where that goes. All right, so here we are back here at the beginning of the session. The YM trade that I just took, that I just told you about, I am bumping my stop to break even right now. Going to break even on that, and I'm going to lock in 5 ticks on that. Now I'm going to lock in, I was going to lock in 10 a second ago, but it should get up above 31.80. I'm out with 5, but I should get up above 31.80. I'll get to that in a second here. The trades that we took this morning, we started out here on the YM. Our first trade of the day was here on the YM. We picked up 10 ticks on that one. Okay, and then the next trade that we took, getting the goal for the day, the next trade that we took was on the Russell. And we had 2 ticks on that. And the next trade after that was back on the YM right here. I got 30 ticks on that. So these were the first few trades where I got the goal. So I had this one, then a Russell with 2 ticks, and then this one where we got 30 ticks. So after this, I was plus 10. After this, I was plus 40. After this, I was plus 46. And after this, I was plus 56. That should be over here, I think. I was plus 56. And then I had a couple of break-even trades in here. And then I had that. I don't know why I got all moved around, but that should probably be over here. And I went from 56 to 61, and then we stopped out right here. I went down to 51, and then I had a plus 1 to go to 52, then a break even, and another break even, and another break even, and another plus 1 to go to 53. This should be over here. Why is it shifted around like that? All right, so then I went from 53, And then on this one here, we went to 63. And then on that one, we went to 77. I don't know if it was that one there. I think it was over here. One of these. I think it was that one over there. And from 63 to 77. And that was where we ended it on the YM for the morning. I mean, this is the one that I just took a minute ago. This blue arrow right here, I just took 5 ticks in profit on that one. That should make it up here to 38 to 11. 30. Am I looking at the YM? 38 to, yeah, 38 to 11. Okay, I am looking at the right thing. Okay. I was just looking at my DOM to see if it had any. It was shown in the DOM that was useful, and it's not really right now. Okay, and that was it. That was all that we had. During the break here, we had this nice blue arrow here, this one that we just took, and that was pretty much it. Right. The Russell, we had a few trades here on the Russell this morning. We had a lot of trades on everything, I think. Not a lot. The Russell was the least amount. We had 4 trades on the Russell. We'll go back to the beginning on this. Okay, now right at the beginning here, we had, I'm curious about this. Right at the beginning here, we had an opportunity. This was the one that I told you about. We took 2 ticks in profit on that. Then I'm curious about this. Did we ever end up going down on this? Or has it just been up all day? It's just been up all day. Okay. But anyway, we had 2 ticks profit on that one. And then you can see over here, we had another one right there. We took 2 ticks more profit there and 2 ticks more profit there. That put us at 6. And then we had one more trade somewhere. It was a 4 tick profit. Oh, okay. I'm sorry. This was a 2 tick profit here. And that was a 2 tick. And that was a 4 tick. Those were the trades on the Russell today that we did. All right. We had a 2 tick, a 2 tick, a 2 tick, and 4 tick. It got us to plus 10 overall. During the break, there was a blue arrow here. Nice profitable trade. Another blue arrow here. Profitable trade. 2 blue arrows right here. You would have taken the first one, and it probably depends where I would have entered if I would have gotten a break even on that or not. If it went up to 4 ticks in profit there, I would have just gotten the break even and not taken the second one, because you don't take the second one. You only take the first one. If you take the first one, even if you don't take the first one, it has to put in a higher swing before you can trade in that direction again. Like this green arrow right here hasn't put in a higher swing yet. You could take the green arrow, but it's got to put in a higher swing before you can trade in that direction again, and it just did. All right, so that's what the Russell did today. We were up plus 10 ticks on the Russell. Now on the NQ, let's get going here on the NQ. This isn't the NQ, this is the ES, sorry. Let me scroll back here on these. Oh, we don't have far to scroll on these. All right, on the ES, we had a break even on that trade. Then we stopped out on this one. Again, these things they don't seem like they're in the right order here. I don't know why I would have had a long trade right there, right? But the next trade that we took in here stopped us out. This is on 7 range, right? I don't know what the heck. But anyway, we stopped out. It looks like these are all shifted a little bit. Like this should be over here, where I stopped out there. And these are 2 long trades that I have that don't make sense to be where they are. But anyway, the way the ES worked out, we had a minus 10, then we had a plus 2, then we had a plus 1, then we had a plus 8. The plus 8, I don't know where it is. You got shifted all around today. But those are the trades that we had on the ES today. I don't know exactly where they all were. We had the break even here, then we had a minus 10 somewhere. I think this was the minus 10. No, it wasn't that. It wasn't that. The minus 10 was earlier. But anyway, we had a break even, then we had a minus 10, then we had a plus 2, and a plus 1, a plus 8. That got us to plus 1 overall. During the break, there was 1 trade right here. There were green arrows right here. If you took any one of those, that would have been a little bit of profit or maybe a break even. You would have had to skip that. And this right here is actually a ribbon trade. I know it didn't give you an arrow because it didn't come onto the overbought, but it was actually a ribbon trade because it pulled back and hit the ribbon coming off a low swing. The outer band is red here. Now that's important. Anytime you get a trade that you can take off the ribbon when the outer band is the right color, that is usually going to work out to be an awesome trade. Okay, anytime you can get that kind of a trade, take it. All right, so I'm gonna move this over a little bit and we'll get into the NQ now. We have a bunch of trades on the NQ. I know the colors are deeper on the NQ. That's because I have 2 PPs on here. One of them is a testing one to give me the actual slope the lines at various times. I'm going to hit Alt and back on this. Again, if anybody's got any questions, all you have to do is type them in. All right, if you want to see another symbol, you want to see a crypto, you want to see Forex, anything like that, just type it in, and I'm going to take a look at it with you. While I scroll back here, please bear with me while I scroll back. Okay. All right, so here we go. Our first trade on the NQ is right here. We had a minus 20 on the first trade. That is correct. The next trade that we took on the NQ, why is this not letting me scroll it? Do this. Okay, there it goes. The next trade that we took, we had a break even right there, another break even there, another break even there, another break even there, another break even there. I was getting a whole bunch of break evens on the NQ. Then finally, we got a plus 30. That put us at plus 10. And then we followed that up with a break even and another plus 30. That goes to plus 40. Then we had a stop out right there, stopped out, and that put us back down to 20. Then we should have another stop out right there, stopped us out to the tick. And that put us back down to 0. We had a break even, then another plus 30. So that got us to plus 30 again. And I missed a whole bunch of trades through here. A plus 30 there got us up to 60. Another break even, missed a whole bunch of trades through there, some really nice ones. Another plus 30 there got us up to 90. A break even, then the next one should have been a 16 somewhere. I don't know if I put them all in. I had a 16 that got us to 106, then a stop out that got us back down to 86, then another stop out that got us back down to 66. Then a plus 30 that got us back to 96. Then another stop out that got us down to 76, and then a plus 30. Okay, so they were all in line. Then we finished off with a plus 30 that got us up to 106. So it was a lot of back and forth today with the NQ. During a break, there was one more trade right here that if you would have gotten your stop to break even fast enough, you would have gotten break even. If not, you would have stopped out. Definite stop out on that one. And the green arrow is looking pretty good through there. This one here would have stopped me out. You know, it might have been a stop out to the tick because right here I could have gotten it to break even, but I would have gotten it back on that one. That was a plus 30 right there. And break even, wouldn't have followed up with that trade. Going through, and that brings us current. All right, so we ended up with plus 106 on the NQ today. Plus 106. Russell's got a trade right here where it's at. The YM does not have a trade where it's at, but the last one did back here. All right. And that is it. Okay. So I guess we're just going to get into the live trading right now. All right. If anybody, before I do this in the YouTube right now, anybody that's watching in YouTube, if you haven't taken a free trial with us and you want to, go here to mytradingiq.com. Click here on the home page of mytradingiq.com. This purple button right here. Purple button. There's no credit card required for the trial. All right. Click the purple button. It's going to bring you to, I think, this registration page. Yep. Fill this out, gives you first name, last name, email, phone number. Fill out these little things, just lets us know who you are as a trader. And down here, if you have a Ninja, give us your machine ID. If you have TradingView, give us your login ID. Hit the register button, and you'll be all set. Okay. Again, if you just did that, there are two ways to get your charts set up. All right. One is to just send us that stuff, and when we send you an email that says it's all set, just go to your charts. Under your indicators, you are now going to have an invite only area. Inside the invite only, you're going to have a context PP and an ultimate slingshot. You need to click them one time. Each one time on whatever chart it is you want to put them on. Like this chart right here, it's already got the slingshot, but if I take that off and I go in here to indicators, go to invite only, click it one time, and the slingshot's going to show up. You don't have to make any changes. Up here for the context PP, You go up here, invite only. You can click context PP. Now, the context PP, you do need to possibly make some changes. It depends what market you're putting it on and what time frame you're putting it on. But for the way it's designed for us, it's made for the ES and the NQ, meaning the sensitivity settings are set for the ES and the NQ right here. The sensitivity is 0.35, right? That information is here on the trade rules page up here. The sensitivity settings are right there. So for whatever market you want, you can find the sensitivity settings. Now, if you don't have one, whatever you're wanting to trade, if it's not listed up there, then what you have to do is just adjust it so you have a no trade zone. This is the blue area right here. You have a no trade zone where the market's choppy. So adjust your sensitivity. Like if I put this on a 30-minute, well, if I put it on something else, let's put it on a 5-minute. Okay, 5-minute. Now, what you would want to do is adjust your sensitivity settings so that the no trade zones appear just where the market's flat, right? Where the outer bands are flat. It probably won't be a huge adjustment for the ES, but if you want to make it more sensitive, then make this number bigger. That means make the no trade zone bigger. Make this number bigger. If I make that a 0.45, watch, this is going to get bigger right here. Eventually, that's the no trade zone. You see it got bigger there, it got bigger over here. That's the no trade zone. If I make it smaller, then that is going to get much smaller. All right, all the no trade zones that you see right here will get smaller. You'll see, it takes it a second there. Some of them went away completely. I have it 0.35 is pretty conservative. Yeah, that's what I have it set for the ES, and that's set for the ES7 range. Okay, see how conservative it is in here. Those are just some adjustments you'll have to make if you decide that you want to have your own charts or your own time frame. You don't use the time frames that we suggest. It's up to you. Now you may have noticed in here there are these high-low things right here. All right, now that's a feature that actually comes with TradingView. I just figured it out last night how to make adjustments for it so it's helpful to you guys. The high and low is what's in view on your chart. It's giving you the high and low of what is in view on your chart. Okay, it's not the high and low of the day. It's the high and low of what's in view on your chart. So if I were to expand this right here, you see the high is suddenly not right there anymore. The high is going to be somewhere up there. What's in view on the chart? Because this is in view on the chart. Okay. So that's what the high and low is going to be. If I minimize it, I bring it back down, then all you can see is this part right here. So you see the high there and the low there. And that's great information for people who trade like we do or like I do. Because what I'm interested in is the prior swing high from when I get my trade entry. Like right here, I'm interested in this swing high right here because I think that's where price is going to go. Right? If you get an up close on the Russell right now, it would be a valid long trade. It'd be 61.4. Add 8 ticks to that, you'd be buying 62.5. Oh, sorry, 62.4. If it's still, the bottom is still right there, 61.4. Add 8 ticks. 61.4, 6, 7, 8. I'm sorry, I had it wrong. I did it wrong. You'd be going long. Anyway, right here, right now. Anyway. And what I'd expect is it's going to get up to here, right? So I just did go long, and it's about to stop me out. But I'd expect it's going to get up to this level right here. Now, that's a valid trade. It didn't come out of the oversold, so you didn't have an arrow on it. You're going to get an arrow on this one, the green arrow, that should get up to this level right here. Now, I jumped in a little bit early on that, but it should get up here to this level right here. Okay, it should get up to that level right there, the 1963.2. It's nice to have that printed for you right on the chart, so you don't have to go and search for it and write it down yourself. I didn't bring the question box up. I should probably look at the questions in case anybody's asked any or made any comments, and nobody has yet. Let me go back out to the YouTube. And nothing's going on YouTube too. All right. So that's all of that stuff. That was a lot of stuff. It seems like. right? You see how this is given the swing high right here. And this is what we're really interested in. You know, I'm interested in what's right in front of me right now. That's what I'm trading with. So it's good information to have displayed for you right there on the chart. The partners meeting last night, we talked about doing some things. If you guys were in the partners meeting, but not in the morning session this morning, you know, we talked about creating something that's going to give the information about where the bar is going to close while the bar is being created. I can't do that with range bars in TradingView. Okay, I can't do it with range bars in TradingView. Now, thinking, can I do it with range bars in DT Pro, and is it the same exact thing? That's the real question. That I do not know. I do not know. All right. So we're just waiting right now. We're waiting for opportunity. Now, when is this Bitcoin halving supposed to happen? Does anybody know? Oh, is it really? Okay. All right. So I have this on a. All right. Let me go to a 30-minute on that. Do I have this on the right thing? I'm going to put it on a daily chart. I think that's what I'm looking for. The daily's got all my stuff all over it. There it is, the daily chart. Okay, so that did drop down quite a bit further than I thought it was going to, but I think it's right at the point where it's going to make the run. It was the same thing that happened back here. It dropped down right before it made a big run. It dropped down a little further than I wanted it to right here, and then it ran. So I think that that's probably what's going to happen here over
The
the next few
markets
days.
usually price in a halving ahead of time, and we've seen a big run up here heading into the halving. And so once the halving happens, it's kind of a buy the rumor, sell the news sort of thing. So we see a dip in the coming days. But you got to keep that bigger picture look. About 30, 45 days out from the halving, we should begin a pretty good bull run. That's just based on how previous halvings have played out.
So it'll be giving you some good buying opportunities.
Yep.
And for those of you guys who trade futures on crypto, you know, that's something to consider. Something to consider. Selling the news. You know, you'd be buying puts right now. And and if the halving does, when the halving does come, if it does drop when the news happens, you'd be making some money on that. And then when it's dropping, the calls are going to be dirt cheap. So you'd be buying some calls, you know, 30 days out, and probably make some money on that too, in both directions. Just food for thought. Doesn't have to just be futures that we're doing in here. All right, so on the YM, we got a low here of 218. Now, if I do the math right, it's 18 plus 6. Put it at 236. My YM DOM does not seem to be in the same place. Yeah, I guess it is in the same place. Okay. Yeah, so right there is the right place. 236 was the right place. Okay, so that blue arrow right there is a valid long trade, and I just went long on that, and my stop is 10 ticks away. Okay. We'll see what happens.
Guess when the final halving date is.
Is it like April Fools and
20? Well, it's in 20. It's 2136.
2136. Wow.
The year 2136.
Yeah, I didn't think. Wow, they're gonna go that far out with it. 2136. I thought there was 2136.
Here's what I'll
do. Like 3 million left to mine or something like that. I thought is all there was, right? I mean, I don't know enough about it to really say, but I thought that 95%.
I just sent you a chart in Telegram.
Okay. Let me go see. Here it is. All right. Here is the chart. So block height.
I'm not trying to say that I understand it all.
I don't understand any of this.
But I can read the date over there. Looks like the final
Okay.
halving will take place in the year estimated 2136.
Wow.
Because when each time when a halving happens, that means let's just say a miner got paid $100 for every block they mined. Once this halving hits, once we hit a certain number of blocks, now they're only getting paid $50 a block. And then the next halving, they'll only get paid $25 a block. And the next halving, they'll only get paid $12.50 a block. And keeps, it just keeps halving and halving and halving and halving all the way up to over 100 years from now.
Wow. Yeah. And they're going to be getting paid nothing per block. So I mean, why would they bother mining it? It's got to be some reason for it. I mean, they're assuming there's going to be a huge demand. So this blue arrow here that just stopped me out to the tick had a nice big run right there.
Yeah, anytime you have a diminished supply, the price, in theory, should go up.
You would think. It should. I didn't realize there were that many halvings. I thought because there was so much of the Bitcoin is already mined, the majority of like 95% is mined. I didn't think there were going to be that many halvings left because there's so much that's already mined. At least I read that. I read that like 95% or even more than 95% is mined.
But it's going to take 100 years to mine the final 5%.
Wow. All right.
Which is, it always surprises me when I hear about these companies that have spent, tens of millions of dollars buying equipment,
mining equipment
and setting up, it's like, is it really worthwhile to keep mining at this point? Well, if Bitcoin goes where they say it will go, lots of forecasts out there for $1 million plus, not anytime soon, but in the future. I mean, we'll see.
I guess you know what, it's all proportional really when you think about it, because if they're getting, like let's say right now they get 1 Bitcoin for everyone they mine, and then when it halves they get half a Bitcoin for everyone they mine, and then the next time it halves they get a quarter Bitcoin for everyone they mine. It's a quarter of the Bitcoin. It's not like a dollar amount. It's a quarter of the Bitcoin. So it's a quarter of a coin. It's like almost like a physical amount rather than a dollar amount. So if the Bitcoin's $2 million and they get 1/100th of a Bitcoin for every one that they mine, that's so proportionally it will work itself out as long as Bitcoin keeps going up. If Bitcoin doesn't keep going up, then it's not gonna work itself out. But the whole supply demand thing.
Hong Kong just approved their spot Bitcoin ETF, so
yeah. So
I still got to help the future.
Going.
Mainland China people won't be able to legally access those, but they probably got friends and neighbors in Hong Kong. But we'll see what kind of impact that has. And Michael R., in response to your post, yes, there have been 4 halvings already, and then we're going to get this one here.
1, 2, 3, 4, 5. This is the
2024. And it'll be today, tomorrow, when that next block is hit, when the block that signals it, and then we don't get another one for 4 years.
4 years.
It's every 4 years.
Like, wow.
Okay.
Well, good stuff. Good stuff. All right. So over here right now, we're not in the oversold, so we're not getting kind of an arrow on the YM coming out of it. Over here on the NQ, we got a green arrow right there. I don't have that trade on yet. It's already gone 8 ticks into profit, so it's not really worth taking at this point. Right? It's already gone 8 ticks into profit, so I would have bumped my stop to break even on that one. Damn, there it goes, tanking. That's awesome. All right, and the second green arrow right there. Now you can't take the second one. If you took the first one, You can't take the second one. It's got to put in a lower swing before you can take the second one. Okay. We never got the arrow over here on the YM. We're missing the paint on that one right there, but it doesn't really matter. All right. All right. All right, so we're testing right now on the NQ. We're testing the ribbon. We need a down close. Now, it's not going to give you an arrow on a down close right now. Now it will. Okay, now it will. So you can short the down close here on the NQ.
There it is.
Here it is, blue arrow. That is the short on the down close, and here it is. And we're going to break even after 8 ticks in profit. This is the NQ, right? After 8 ticks in profit, it's going to get down to 89.50. I don't think it's gotten there yet. And almost, there it is. Stop to break even. And now we have a 30 tick profit target on it. Right down here is where it should go down to 83.75. And look, that's 1 tick below where our target is. That would be 31 ticks. We ended up with a break even. But people ask often why I have a 30 tick profit target. And the average true range of a leg, it varies, of course, from day to day and the volatility from day to day, but 8 points on the NQ seems to be a good leg size that it gets, frequently. And so 30 ticks is just under 8 points, right? 32 ticks is 8 points. 30 ticks is just under 8 points. And so I'm happy getting 30 ticks. Anytime I can get 30 ticks, I'm happy getting 30 ticks. And it works out well. That's why I use 30 ticks as that profit target. The other markets, I also use the 30 tick profit target just to be consistent across the markets, but I don't usually hit the 30 tick profit target on the other markets. I usually end up with a trailing stop exit. Okay, unless I see another reason within the DOM or within the price action on the chart to put a different target on. I'll usually end up with a trailing stop exit. The YM today gave us a 30 tick profit target. I think it gave us 2 30 tick profit targets today, or it gave us 1 today and 1 yesterday, or something like that.
For those listening on YouTube, it's important to keep in mind that it's not a matter of just having an arrow pop up and you pull the trigger. What precedes that arrow is you having patience and self-discipline to wait for the trade to set up. And then once you get the go signal, you don't hesitate, you don't second think, just instinctively act.
Yep.
And that's super important. I mean, because without patience and self-discipline, no strategy, no methodology is going to serve you. If you're always second guessing or jumping the gun or dragging your feet and not having patience and self-discipline.
The analogy I like to use is it's like pulling up to a stop sign. What you got to do at a stop sign, You get there, put the brakes as you get into it. You wait. If there's cars in front of you, you gotta wait your turn. Everybody gets up to the stop sign. Everybody stops. Everybody goes. You know what you got to do. You don't hesitate. You know what you got to do. You just do it. And that's pretty much universal. The stop sign thing. Because I can say the traffic light, but the traffic lights are different in different countries. Like in Europe, in England, for instance, they have like blinking yellow lights. Now the blinking yellow light happens in the in-between state between the red and the green, and has various meanings.
We have some of those here in Phoenix.
Yeah, I mean we have blinking yellow lights, but the blinking yellow light is usually just a solid blinking yellow light. It never changes to the green or the blue, or the green or the red. It's just a solid blinking yellow. But they have a blinking yellow that happens before it changes. Ours goes yellow before red.
Guys, if you're listening in on YouTube, you have any questions whatsoever, if you want to look at a specific symbol, a specific stock, particular time frame, just type it into the chat box.
Yes. Anything you want to see, just type it in.
Because once this broadcast ends, then we won't be coming back later to see if anybody typed in any questions, although I guess we could. And maybe I will. But if you have a question, ask it now.
Yes. If you have
What
a
is
question,
this
ask it
thing?
now.
Why'd you say that? What does that mean? Well, why'd you do that? I mean,
Like
or maybe you're
this,
just
for instance.
all busy signing up for the free trial. That's good.
And that's fine too. Let me just show you how to do that one more time, in case you are busy signing up for the free trial. You want to see how to do that, you go here to mytradingiq.com, and right here, click on the purple button to sign up for the free trial. No credit card is required for the trial. Sign up for the trial, and you get all the information you need to get your indicators indicating on your desktop. Okay. Now, this is a thing called TV Trades, targetviewtrades.com. This is Exxon stock right here. And this is on a 16 range bar for Exxon stock. So that means every bar is 16 cents. This is $120 stocks. You might want to do it on something bigger than that, but I know we have one of our passport holders actually trades a lot of Exxon stock, and he does it on a 16 range bar because making a buck on a 16 range bar when you have a couple thousand shares is a buck with a couple thousand shares in profit, or a couple $1,000s in profit. So like right here, we gave a long indication this morning at 9:54. This was today, right? Yeah, at 119.71. It ran all the way up to 127.93. So a buck and $1.20. It's $1,200 if you had 1,000 shares, and he does. And over here, yesterday afternoon there was one right here. I had a gap up this morning. With equities, you're not really going to be taking the short trades, so you can actually shut that off right here. You shut the shorts off, so it's only showing long trades. Okay, you see it puts target lines on here for you as well. Now, this is primarily for equities, so if you have any questions about that, type them in. Back here to the futures, because that is where my world is every morning, every single morning. While I was showing you that right there, we just had a really nice trade here. We have another one going on right now on the NQ. I'm trying to get over there and put an order on. We need a down close here on the NQ to get that. If it triggers, we're going to have a blue arrow right now. If it triggers, could be a green arrow, but it's probably going to be a blue arrow. Nope, now it'll be a green arrow on a down close. If it happens, it might not even happen. Nope, it's not going to happen. Okay, what time is it? It's 1:30. Okay, we might have one more trade that we can get off here on the Russell or on the YM.
Yeah, the down might pull up. And the Russell.
The Dow's looking like it, and the Russell, they're both pulling up to test the ribbon right here. So you just have to wait. You have to be patient and wait for it to happen. Okay. There, the Russell is pretty much at the ribbon right now. If you get a down, now it is at the ribbon. So what you do is this. Let me bring my Dom over so I can show it to you. Okay. So I know where the top of the bar is. So the bottom of the bar is going to be 8 ticks away from the top of the bar. The top of the bar is right here, 59.3. So I'd sell 8 ticks below that right here, 58.5. So I've done the math for you. Now we get the down close, we get the green arrow, and I'm in the trade. It gave me 1 tick of slip, and it actually slipped me on the other end too. And it stopped me out in this case. That happens. But the beauty of it is I knew exactly where my stop was going to be because these are range bars. I have 10 ticks of risk on every trade. That actually gave me a slip of 1 tick, so I had 11 ticks on that one. But the beauty of it is, you have predefined risk, so you know when you put the trade on how much you're risking. And what I was expecting is it was going to get all the way down here. Now this one is probably going to do it. It's probably going to get all the way down there on this green arrow, but you can't take that one following the rules. You can't take that one because this one didn't put in a lever swing. Okay. The one over there on the YM just came back and hit the ribbon. All right, so that needs to push down as well. The NQ, if you look at the bigger picture here on the NQ, now Dwayne had started to look at this with you, I think, on the bigger picture stuff a few minutes ago. What I was looking at earlier in the room this morning, let me bring it over and show you. I know I'm out of time, but I still want to show you. What I was looking at this morning in the room was this. Let me back this out. Remember this morning in the room, I said this number right here was going to be a significant number when it pulls back to that number. And it actually went right through it. I wasn't expecting it to go through it when it pulled through it. the reason I was saying that is because it was an MA1 BBC cross right there. I knew it was going to search for that number, and it kept going down, and it found that number, and it kept going down right through that number. So now we've got a 50% pullback that's hit resistance right here. Right, we have a cross of the MA1 BBC, that's significant resistance by itself, and it's also the midpoint of the move, the whole day's move. So it's the resistance right here, and I'm totally expecting the S to fail off of this. The Russell, I had said this morning we had lower highs and higher lows on the Russell and on the S, as a matter of fact. And the Russell's pulled back down. It's bouncing off the ribbon right here. It's in ugly space right here, where it's got to close up above the MA1 on the 30-minute bar. It's got to close above the MA1 to be able to move back up. If it doesn't close above the MA1 on this bar, you're going to be in this ugly space for a while, and it may end up the rest of the day just being choppy. And the NQ. The NQ is in kind of the same space, but coming at it from the bottom right here. The MA1 is right here. It's going to act as resistance if we get through the MA1. I don't have the black step line on here, but if I had the black step line, I'm going to put that on. The black step line is important because it signals when price should go up to the BBC. Okay. That's what the black step line does in this time frame. The black step line signals when price should go up to the BBC. Here it is. Okay, so in here, when the black step line crosses inside the MA1, so it might go sideways here for a couple bars, but when that black step line crosses inside the MA1, like right here, then it should make its march up to the BBC. All right, so it's going to take enough close on this, probably a couple of bars sideways, to get that cross in there, and then it'll go up to here, and it should bounce off of that and move down. Right, that was my quick big picture analysis. And the YN did give the green arrow short right there. That worked out. This one here didn't put it in the lower swing yet, so I stopped out on that, but it didn't put it in the lower swing. It did go down. It just didn't put it in the lower swing yet to take a follow-up trade. So let me finish up by saying this. If you have not taken a free trial with us, go here to mytradingiq.com and sign up for the free trial here. Click on the purple button. It's a pretty simple registration form right here. Yeah, this is it. Just fill it out. That's all you got to do. Okay. That's it. With that, I can pass it back out to fabulous Phoenix, Arizona's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Recap of the morning session.
Today, it took 4 minutes and 3 trades to get to $3,360.
Good job.
Thank you.
Nice way to end the week.
It was indeed.
All right, guys, we're going to pick up where we left off. We were on the NQ, and we talked about, okay, this low, talking about this, and that we were building a green candle, and where would the market find resistance? And it found it at red and falling. Okay. Now it's finding support at the step line. See, when red and falling gets directly above price, it can become resistance. When the step line gets directly below price, it can become support. So price is kind of trapped right here. It needs to get above this swing high, and then it can run to this swing high, and then it can run to the BVC. Or price can trade below the step line, take out that swing low, and then you got a beautiful window of opportunity from 17,238 down to 17,220. That's 18 points at $20 a point per contract traded. And the only market that we're actually below the lowest weekly zone for the week is the NQ. Now, it's possible, based on history, remember we've been publishing the zones almost 15 years on a weekly basis. By close of business today, we could be at or above this zone. Now, that's simply based on history. Notice how the step line is starting to kind of hook right, okay? See here, it was just coming straight down, and then it got that hook. See, it's trying to cross red and falling. If it does, then that will most likely send price up to the BVC. Now, the pullback to the BVC pulls more often than not, whether it's pulling from above or pulling from below. It holds more often than not. But eventually, it will trade through. That keeps the markets fluid and tradable, and Again, the step line crosses to the left side. It's on the left side of red and falling, but if it crosses over to the right side and we trade through the BBC, then we end up the week at or above the lowest weekly trading zone. Okay, crude oil. Now, just to be safe, I'm going to show you this, and then I'm going to go ahead and roll my crude forward to the June contract, so that I don't forget Sunday night, even though I got a big post-it note on my monitor. Here's where we opened last night. Okay, it was 15 minutes into the life of this candle that these CTA targets were published for our members and our trial members. And it took until 2100 hours or 9 o'clock. We hit the long target. But then the thing just kept rocketing. It crossed this zone. Now, the zone is 8470/75. The low of this candle right here is 77. So 2 ticks. We ran all the way up to this zone. We spiked it. Okay, now this is Friday, Thursday, Wednesday, Tuesday. See this high back on Tuesday? We took it out by just a little bit. Okay, and just a little bit, you should be very suspicious of just a little bit. Because this is exactly what can happen. When you put in a new swing high or swing low of just a little bit, okay, relative, of course, to the time frame that you're trading, be cautious. And as you can see, what happened? The step line crossed blue and climbing. Price came right back to the BBC. This time we traded through the BBC and continued all the way down to the short target. Short target support. Now notice this support. There's yesterday. Get the idea? Support will always send the market looking for resistance, which it found at the zone and the previous bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Okay, so now let me just roll this baby forward so I don't forget Sunday night when it's time to go to work and zones and all of that. Okay. Now for those of you that are new or that are on the trial, we opened for business Sunday night at 6 p.m. Eastern. That's when the Globex markets open. That's the beginning of the Monday session, even though it's still Sunday night here in the U.S. No, you can't trade stocks until Monday morning at 9:30 a.m. Eastern. As a futures trader, you get a jump on the whole thing. Get your goal for Monday, Sunday night. All right, so we've moved crude forward to June M, which means I can throw away this post-it note and press on the goal. Here's where we opened last night. Red and falling turned blue and climbing. One's bearish, the other bullish. And we ran right through the target. We spiked the zone. And then we ran into some resistance. And if you go over here, I haven't really taught you about that. Right there, that's 24.22. What's that? That's 32. That's probably not what I was looking for, was it? Yeah, that's failure right there, because we overcame the zone. The fact that we failed to take out this high, okay, and we traded above that little cross right there. That's just a sign of weakness, and we can see what happened. Got below the BBC. We didn't quite make it to the short target. Got real close. Buyers came in, and then we got almost to the zone. So here's the perfect stack. Price, step line, blue and climbing, BBC. Just got to go long. Now, when gold moves just $1 from 24.15, 24.17, that's $200 per contract traded. If you run the right to trade 10 contracts, and that's $2,000. Okay. When crude moves $1, that's worth $1,000 per contract traded. Silver moves $1, that's $5,000 per contract traded. But you can see when price drops to a zone, support, when it rallies up to a zone, resistance, same thing over and over, again and again. All right, speaking of silver, okay, here's where we opened last night. 15 minutes into that candle, the CTA targets were posted, and we dropped. Now you only need 2 pennies to get your goal for the day with silver. When the market finds support, what's it going to do? It's going to go look for resistance. We overshot that resistance right there. April 15th at 2300 hours, put in a swing high. It became today's swing high. So you just constant, like I was showing you on the logic alerts earlier in the broadcast, you simply have to keep looking left to know where the next potential obstacle is. And when it overcomes one obstacle, you look at the next obstacle, and then the next obstacle, and then the next obstacle, until it fails. And when it failed, it came all the way back to the short target. Support sent us to resistance at the zone. Resistance sent us back to the short target. Support at the short target sent us back to the long target. Consolidated at the zone. We've managed to trade a little bit higher, but we haven't taken out that high right there. See that? Okay, that's really important. Because also the step line is starting to cross blue and climbing. So what does that tell us? Price is most likely going to retrace back to the BBC, which happens to be right at the zone. So that's support times 2. Last but not least, on the euro, here's where we opened last night, and we dropped in pretty short order right down to the short target. Slow. See that? Then we pull up to the BBC and find resistance. So we retrace and find support at blue and climbing. We get above the BBC, we get a leg, retracement, leg, step line crosses, retracement to the BBC, and then a leg that takes us all the way up to the long target and the previous bearish cross. See the bearish cross here? See the resistance here? A bullish cross that leads to an extended move. The first time price revisits that area, like right here, will almost always be good support, and it was. Bearish cross, that's when the red line gets below the green line. First time price revisits that area, will almost always be good resistance. Does it happen every time? No. There's very few things that happen every time in the world of trading. Now it's going to be real interesting to see sitting on top of the 38% of extension. We're above it. We've spiked it. Question is, where do we close? Okay. That's a big question, because that's going to give us some idea of what to expect on Sunday night. To become a member, do it today. Go to mytradingiq.com. If you have questions, call 949-42-EMINI. If you get the voicemail, leave a message. We'll call you back. Or email us support@cfrn.net. 9 out of 10 new traders fail simply because they don't have anyone to teach them how to trade. You wouldn't expect to become a brain surgeon on your own, or an airline pilot, or a nuclear physicist, or an attorney, right? I mean, it's just, you just know. You got to have somebody teach you how to do the job. See, with trading, now, all those other careers that I mentioned, not only do you have to get an education, but then you have to pass some kind of test. You have to get certified, get some kind of diploma. It says you've done the work and you meet the standard. That doesn't exist in the world of trading. It's no wonder 9 out of 10 new traders fail. Now, there are other reasons, but the biggest reason is the no teacher part. That's why we put so much emphasis on our live training room. 2 hours every trading day. It's an interactive environment where you're trading along, qualifying to go live, and asking every question you can think of. Along with group training, as a passport holder, you have access to one-on-one private mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Future, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance. Over and over, again and again. It is a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, be able to attend the members-only workshop every Thursday night, all that and much more. Passport is your all-access pass to everything we do, everything we've ever done. It's everything a trader needs, all under one roof, one low price. mytradingiq.com. Okay, good word for the day. A whole new approach. John 1:14. The Word became flesh. When the angel visited Mary, he said in Luke 1:30, do not be afraid, Mary, for you have found favor with God. Yet, when it comes to approaching God directly, many religions are ruled by fear. American author Philip Yancey says, certainly the Jews associated fear with worship. A person blessed with a direct encounter with God expected to come away scorched or glowing or maybe in pain like Jacob. Among people who walled off a separate sanctum for God in the temple and shrank from pronouncing or spelling out the name, God made a surprise appearance as a baby in a manger. Caught everybody off guard. In Jesus, God found a way of relating to human beings that did not involve fear. A new covenant, a new beginning, a whole new approach that would not emphasize the gulf between God and humanity, but instead would span it. I learned about incarnation when I kept a saltwater aquarium. You would think, in view of all the energy expanded on their behalf, that my fish would at least be grateful. Not so. Every time my shadow loomed above the tank, they dove for cover. To them, I was deity, too large for them. My actions too incomprehensible. My acts of mercy they saw as cruelty. My attempts at healing as destruction. To change their perceptions, I would have to become a fish and speak to them in a language they could understand. A human being becoming a fish is nothing compared to God becoming a baby. Yet that is exactly what happened at Bethlehem. The God who created matter took shape within it, as an artist might become a spot on a painting, or a playwright a character within his own play. God wrote a story only using real characters on the pages of real history. And that's why the scripture says the Word became flesh. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.